Micro sell here and saying, right, that micro gives me an opportunity, and guess what happened? The gold price sold off. Excuse me. When we see a micro sell coming in again here, we can see that if I now draw a new line across the charts, we can see a second opportunity to sell in line with the macro and the micro just there. And we can see that that gives us a very, very nice opportunity to go short during that little period there, doesn't it? Very nice opportunity to go short during that phase. So you can see fitting the micro in with the macro is very easy. All you've got to do is know what the macro is and then trade in that direction when the micro stacks up. And not just the micro, but also things like the book. When the book stacks up with the micro, when the book stacks up with the macro, you start to recognize that this is a very good short. And if that's a very good short, where else is a good short? Well, what do you avoid doing by doing that? What do you avoid doing by doing that, Stuart? You avoid buying this fade here, don't you? You avoid buying that fading phase of the market right there. Because that's important, because obviously, you know, when you miss out on these dumb trades, you simply say to yourself, well, I'm not going to do that bit of business. There's no way I'm going to try and buy that against this macro, because the macro is completely against me, right? So what are you going to actually try and do? You're going to wait for the micro to change into a bearish trade. You're going to draw a line across your charts, and you're going to say to yourself, I'm going to sell this. You start selling back into that phase. And it's just very, very simple to see it. So you see another one here, you see another line here, you see it again, and you say, right, I'm going to sell into this phase. You're doing exactly the same. Guess what's happening? You're not taking any losses. You're not fading against a macro trend. You're not fading against any of these elements. And obviously the micro and the macro are sitting perfectly in line with each other. And all you're doing is trading in the direction of the micro. You might be saying you've missed off the earlier ones. It still made money because there was a fade coming in here. There was a top line there. There was a big green candle. And if you sold there, guess what happened? You still made money. You still made money. And then when the short term went bullish like this, you're obviously a little bit more cautious about fading top edges. Can you buy into those fades? Well, of course, those short-term values, of course you can buy into this phase. But obviously, if you buy into that phase, you're buying into macro selling. And that's something that you have to be aware of, something you have to appreciate, and obviously get ready to perhaps get rid of. So when we look at this as an overall storyline, trading with the micro and the macro together is actually a lot easier than you think. You just need to make sure you know what your macro is against what your micro is. And it should be visible in the same chart. It should be visible in the same screens. It doesn't have to be, but you want to at least know what your micro driver is. You want to know what your macro driver is, and you want to be able to line up those narratives. I've just sold some oil top edges against a bullish book driver. Did anybody join me? It's basically straight out of the classroom we did this morning on book drivers. Anybody join me on the book driver? Well, how obvious was the book driver in this occasion, guys? How obvious? Well, let's take a look and see how easy it was to spot the book driver on oil. Does anybody see the book driver? Is there a massive change in the book drivers? Yes, there is. Yes, there is. There's a massive change in the book drivers. We can see that there is a very, very significant drop-off out of this area, isn't there? A very significant drop-off during that phase. So I'm now aware of that top line. I'm aware of these buyers getting jammed into this price area here. So I take a little quick sell and I get a little bit of a profit, a little bit of 10-tick profit. It's pretty clear, isn't it? Pretty clear. Now, is it the trade I want to be on? Well, of course not, because the big macro is bullish. The macro is bullish. But is it a trade that we could possibly take advantage of? Yes, it is. You might be saying, but it was a very strong bullish book here. Was it a very strong bullish book? Yes or no? This is going to be the content of Monday's classroom, of course. It's in line with Sam's comments about the adding or the subtracting. Is it a very strong bullish book? Not really. Why is it not a very strong bullish book, Miguel? Why are those blue candles not a strong bullish book? Yeah, because the total selling volume, the offers actually declined there, which caused that to rally. So if the offers declined, causing that to rally, that's not refreshed buyers coming in, is it? It's not refreshed buyers. It looks as if it could be bullish, but it's not actually bullish. So when it's not actually bullish, we can start looking at that and saying, okay. So when the offers start coming back into play overall, we can start to say, well, I know that I can get a lean against that, and I can start working the offer side of the book, and I can make some monies. Nice and easy. Clean way of getting a bit of a trade off of that high price, and sure enough, we've made some nice cash off of that little bit of a top line. Not a lot of cash, but again, it's another profitable trade. It's another profitable trade. Now, a lot of people say, but you always have these beautifully cherry-picked opportunities that you show us. But, these cherry-picked opportunities I show you on NinjaTrader, we always trade about a 10-lot maximum. Sometimes it's ones and twos, but we always trade about a 10-lot maximum. This is what we're standing on in NinjaTrader so far today, guys. $17,600 just by the trades that I'm showing you. Basically, just the trades I'm showing you, the ones that I'm taking screenshots of, because a lot of people would sit here and say, yeah, but you probably traded earlier and it lost money, and then you did another trade and it lost money, and then you did another trade and it lost money, and then you sell and it finally makes money. You take a screenshot, you show us it, and it's a winning trade. Well, if that was the case, this would be one hell of a big red number, wouldn't it? It's not a big red number. It's a positive number. It is a profit. There's the current trade on oil that we've got open, and that is how it's working. So it's not like we're cherry picking our way through great trades and only showing you the stuff that works. This is all the trades that I show you. If it wasn't, this would be a big red number. So all the people that have that suspicion in the background that, well, you're only showing the ones that pay off and the ones that the leans that work and all that kind of stuff. Well, that proves that that isn't the case. If it was, we would not be making money today. We reset this account at $100,000. We reset this account just a short while ago at $100,000. And when we look at where it's at now, I'll just show you where it's at. This was reset not that long ago, $100,000. This is what it's at just now, guys. $4.3 million. We started it back off at $100,000 again, reset it so that we could start a new process for the Max program, and it's went from 100,000 to 4.2 million. So it's just the way it is. It's just the idea that the trades that we show you are the trades that we're taking, are the trades that we're developing out, are the ideas that we're trying to bring to the party here. And that sale's doing pretty good now, guys. We've gone off the high price that we were in at. It's dropped off nicely. It's now trading 33s, and we sold at a price of 47. It's 14 ticks. 14 ticks, guys, is a pretty good profit. Pretty good profit.